Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Bull. Thanks for joining us on one of the 42 radio stations on iTunes, on YouTube, or maybe you're listening on the show website, commercialrealestateshow.com. Well, we have a very interesting show for you today. We're going to talk about retail and retail real estate. So first, we're going to talk about the investment sales market, check out volume and cap rates and things going on there. From there, we're going to look at the holiday sales forecast. Are we going to have a great holiday season? It seems like I'm already seeing ads, right? Television ads. I'm already seeing decorations. So maybe we're going to have a big holiday season. That would be great. Then we're going to talk to a major developer who's doing some very interesting projects around the country, and we'll get some intel from them. Then we'll wrap it up with a retail investment broker, get a first-hand look at the market. Please welcome my first guest is Kevin Imboden. He's Director of Research with RC Analytics. He's with us on the phone line here. Kevin, thanks for joining us today.
Hey, pleased to be here, Michael, as always.
Well, great. We always appreciate your insight. You guys do a great job of tracking the investment market. And so where is volume? It seems like from our shop, and we sell shopping centers and things in the Southeast, it seems like it's really picked up. Where's volume year to date?
Well, that anecdotally seems to be the case. And if you would have asked me off the top of my head, I would have said it. By all means, it's picked up. But then looking at the hard numbers, we're actually probably going to finish the year a little bit down if we were projecting to the end of the year. Last year, we were looking at about $88.3 billion in volume across the country. As of right now, we're about 66.8, and that's all retail types, the entire country included. So odds are, unless there are a couple massive unannounced sales between now and the end of the year, we're probably going to come out a little behind last year, but that's really no shame considering how we're even far ahead in both years of 2007.
Yeah, so how does the volume compare to kind of that hot market back in 2007?
So last year was, in fact, the best retail sales year in the U.S. we've ever recorded.
Okay.
And so there's a lot of information going around, a lot of investment and capital that needs to happen still.
Yeah, it reminds me of the old song, When You're Hot, You're Hot.
That's right. And in general, the market is pretty hot right now. So.
Yeah. Well, so where's all this capital coming from, and debt and equity? What's providing all this demand?
So there are many different sources, as always. It can never be anything completely simple. There's a lot of overseas capital that's coming into the U.S. right now. We've seen it across multiple sectors, and that's a lot of investment coming from East Asia. There's some investment coming from Western Europe, and these can be pension funds, these could be large investment companies that are trying to diversify. And then, of course, there's plenty of money in the U.S. that's moving the markets around, too. Blackstone's been very acquisitive this year, for example.
Okay. And what are they looking for? Where is most of the demand focused? What types of properties?
So there's still a lot of investment in the generally core markets. Those primary markets are still compressing, interestingly enough. Some of those cap rates have become very, very tight. And so we are starting to see a good amount of spillover into the secondary and even tertiary markets now. I think for an example, and I'm probably going to run ahead to a question you're going to ask me later on, but regarding cap rates in some of these secondary markets, even from the last time I appeared on your show, Michael, we've seen some compression in some of these secondary markets where they've come down probably a good 0.25% to 0.5% in some of them. That's a pretty big swing in just a few months.
Yeah, that is for a few months. And so give us some examples of these cap rates in some of these markets.
So we're looking at, if we're going to take into account maybe the inner city and the large mall assets, at best, a high 5. I think it averages to a high 5 across those types, but we're still seeing there's a little uptick maybe earlier in the year, and now they're compressing back down again. Strips, interestingly enough, have been on this sort of long-range decline as far as caps have gone. We're looking at probably at the depths of the crisis around an 8.5 for a retail cap, which sounds wonderful now, because now for strip centers we're down to at best a high 6, and they're trending downward still.
Wow. So would that include grocery anchored centers in your forecast, in your numbers?
That's correct. Grocery anchor centers are helping pull those strip caps down because those still have a lot of attractiveness for a lot of the major REITs that are investing in that sector.
Okay. And is that one of the property types in retail that is hot? Is that one of the things that people are really looking for? Is the demand kind of spread over all property types in retail?
It's spread a little more overall. I think people are starting to look around a little bit more like, well, should we diversify into maybe some retail properties that aren't the typical? Because a couple years ago, when things were not looking quite so positive, there was a lot of investment going into those grocery anchored strips. That was what everyone talked about because it seemed like a responsible investment. Everyone needs to go to that grocery store on a more or less daily basis. Those were going to be the kind of properties that are going to hold their value. So, of course, once caps compressed on those quite a bit, well, maybe we can look into some of these unanchored centers that might be a little underused, something like that. So now I think we have a little more diversification where people are shopping around, though, of course, the grocery anchor still is very attractive for some.
Yeah. Well, I think the investment market in retail is very interesting because I think there is a lot of opportunity because I guess seems like it's been the last sector to improve, and then there's a lot of things impacting the retail market, right, with online sales and how fast that's growing. So I guess there are opportunities for investors in retail.
Absolutely, there are opportunities. I think the question becomes, especially looking toward the future, if you have a large center, how are you going to position the center to make it attractive? I hear a lot about that daily use part, which made the grocery store very attractive. There are other essential components here too, though. Can you do things that will attract people to the store or to the center by maybe some non-traditional type planning? Will you have like a food truck event or something like that? Maybe the restaurants in the center may not be that interested in doing that at first, but they might find that it ends up driving traffic to the center entirely. People might show up just to see if there are food trucks there that day if they didn't check the website. So there are a lot of different concepts that I hear about frequently that could be of interest to retail center owners now in order to drive traffic to the center.
Yeah, I agree, and we're going to talk to a major developer later in the show and get some ideas of what they're doing because they have some successful projects. So we have all these influences, online sales being one of the major components. So what do you think? And then we have interest rates that are expected to rise. So what do you guys expect for cap rates moving forward in retail?
Well, I think it depends. I mean, that's the loaded answer, right? Because when I don't really have an answer, I'm going to say it depends, and I have to think about it. But as caps have compressed across all property types, I think the rate of compression seems to be slowing a little bit. I don't have the hard stats on me to say that definitively, but anecdotally it would seem that way, that, okay, we still have this gentle compression that's going on in some of these secondary markets where there are still deals to be had. They aren't quite as rough as the primary markets if you're looking for deals. And I think there's some understanding that maybe for certain retailers who want to be in certain markets, they feel like there's a little bit of undersupply, that there are properties that if they had in their minds would exist, like in good primary locations with a good recent renovation, they would be interested in going into those properties. So that could be another example of where there could be value is, hey, maybe you buy a property that's underperforming, try to do a redevelopment, and then put it back on the market.
Yeah, that's a good point. I think there are some tenants that are expanding that would like some great locations that are having trouble finding them. Well, Kevin, what are some of the other factors that are impacting the retail market today?
Well, I think one thing that we're trying to predict, and it's very difficult to, is what about some of these mergers and acquisitions that have happened in the past year, and will there be more of them? As caps have compressed again in the primary markets, the idea that you could just place a ton of capital in one asset and get a good return, that simply isn't the case any longer. You could probably, if you have a very long investment horizon, do that. But for some investors, they need to place a lot of capital at one time. And in order to do that, well, maybe you could place a couple billion by buying out a company, and instead of getting the 3.5, 4 cap on whatever asset it is in a primary market, you could maybe get a 6 or a 7 by buying an entire portfolio. Now, of course, there are additional costs with that, but with that being said, that cap starts to look pretty attractive when you're just shopping around the primary markets and it's frustrating you're not finding the deal you want.
Well, good point. We may see more of that. Well, Kevin, thanks for joining us on the show today. We appreciate it.
Absolutely. Thank you, Michael.
Check out RC Analytics for some more information on the investment market. Stay tuned. We're going to talk with Jesse Tron on holiday sales forecast. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. RealNex, software for productivity. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.